heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Amazon, Meta, Apple, all out with their latest earnings. We'll dig into the latest results from big tech.
Plus, Vision Pro hits stores. We'll take a closer look at Apple's latest bet on the future.
And an exclusive interview with the Nvidia CEO, where he sees the biggest benefit from the AI boom. But first, let's get straight to some of these big moves when it comes to tech, Ed. And we are at record highs when it comes to Meta. Extraordinary.
Yeah, record highs on Meta. There's like a compare and contrast here. Apple, I kind of think it's the story we expected. They did grow overall in the quarter gone just, and they avoided 5 straight quarters of sales decline. But the stock is down significantly back to where it traded in November. Why? Greater China. Sales in Greater China missing by like $3 billion. But the narrative on the call, yeah, we are 4 of the top 6 handsets in urban China. Incongruous messaging. We'll dig deep into the growth story for this stock. And then there's Meta, right? Meta, to me, is the story today, probably. We're on track for the biggest jump since February of last year. The stock is touching fresh record highs. Is this an AI story, or is this a cyclical rebound in ads? Either way, 1 year ago, we lamented the spend and cash burn from Facebook Reality Labs on the metaverse. But 1 year ago, we also said, okay, year of efficiency is here. This is good. They're back to hiring, and he's thrown in an additional $50 billion buyback and a divvy, and it's a wonder what it can do for the stock, Caro.
Funnily enough, investors like it. And let's dig into the Meta earnings and really what it says about cost discipline. Jasmine Enberg is with us, I'm pleased to say, principal analyst at Insider Intelligence, where you lead the coverage of social media, the creator economy. And before we get into some of the juiciness for the investor base, what do you make of the out-and-out numbers of revenue growth at this particular moment?
Yeah, well, it's clear that Meta's year of efficiency has really paid off. Many of the measures that it took last year helped it reduce its costs, it reduced its headcount, and even with this leaner team and operations, it was really able to exceed expectations really across the board, and importantly, of course, in its core line of business, which is advertising. And to me, this is really a testament to Meta's execution power. If you look across the social landscape, it isn't the coolest or the most exciting social player out there, but it is the most sophisticated, and it knows how to drive business, and advertisers really like that.
Yeah, they were investing in the underlying advertising technology to better serve their clients. But what do you make of also the talk of generative AI? The llama has become basically the giveaway when you go to AI events, and much of that is, of course, based on their large language model. But what does it do in terms of future revenues, Jasmine?
Look, Meta wants to be an AI heavy hitter, and it is working hard and investing in AI to be able to do that. On the earnings call, just in the prepared remarks, you heard executives mention the word AI about 50 times, which really shows how much they're trying to emphasize their work there, as well as how much they truly are working there. And its AI investments have already proved to have a positive impact on its ad business. They talked a lot about its automated tools and AI-driven ad formats really driving performance. And at the end of the day, advertisers, they want efficiency and they want effectiveness, and those investments have really paid off there, and that bodes well for its broader ambitions in AI as well.
I think what we're understanding, Jasmine, is the relationship between the ad business and AI now, right? And so Bloomberg writes in the blog, Meta is still the king of digital advertising. But what they point out is that the boost is coming from China-based companies on spending, and it's an association with AI-generated content. Do you understand that relationship and how AI is basically growing interest in its ad base?
Absolutely. I mean, AI, of course, is growing interest in its ad base and generative AI in terms of the creative tools that Meta is also rolling out for advertisers will do a lot to prove that. I mean, the China-based advertisers is a potential risk factor, though I wouldn't say it's necessarily the biggest one because they have been buoying spending as well throughout 2023.
Later in the program, we're going to go very deep on Apple's Vision Pro. And it makes you think about the Meta Quest 3.
Yeah.
You know, it is hard to keep up with Meta. We were a social media company and then we were a metaverse company, but it was expensive, so we stopped. And now we're an AI company. Did you get any sense of like where the hardware fits into all of this and if the metaverse dream is still alive?
Well, the metaverse dream is very much still alive. They didn't talk about it as much on the earnings call yesterday. Again, the focus was really on AI. And for me, the big challenge now is for Meta to be able to prove that those two big bets, one being AI and the other being the metaverse, really are complementary. It started to lay some of the foundation for that, thinking about the Ray-Ban smart glasses. And, you know, it talked about good sales for its Meta Quest in the last quarter. So there are, some signs of progress there. Still, for me, the metaverse is somewhat of an ill-defined concept, and it's something that, Meta is going to have to continue to prove as it continues to form this vision. It also has to ensure that it can keep up the momentum in its advertising business, or investors won't be as willing to overlook those losses that continue to mount in Reality Labs.
Interestingly, maybe Apple's Vision Pro serves as some boost to sales to Meta going forward as they help with outlining the vision. Jasmine, I'm interested though, you said that China, for example, isn't the biggest risk. For you, what is the biggest risk? Is it regulation?
It's certainly one of them. I mean, just this week as well, CEO Mark Zuckerberg testified in front of Congress about protecting children online. That was a really heated conversation, and it's clearly going to be one of their biggest challenges this year. I mean, teen popularity has become, somewhat of a liability, at least in the eyes of lawmakers. But young people also represent Facebook and Instagram's largest, or one of their largest, really, opportunities for growth. And it's going to have to walk a really fine line in terms of protecting their safety on these platforms and generating revenue. There's also, of course, a lot of other regulation that Meta has to think about, both here in the US and in the EU. And then there's the digital ad market. I think Meta was able to allay some concerns already in the earnings call yesterday, but it is susceptible to fluctuations in the economy that really can impact advertiser demand.
Jasmine Enberg, Principal Analyst over at Insider Intelligence with the Meta story. Thank you very much. Let's get to the Apple story and Apple earnings with Dan Ives, Senior Analyst of Equity Research at Wedbush Securities. Dan, just real quick, the stock is pairing its decline. We're now down 0.6%. We had been down significantly more. What is the story? A return to growth overall, or China is a problem?
Yeah, I mean, Ed, the street's reading through this is iPhone growth's coming back. Next quarter is essentially massively conservative guidance. And now you have AI coming into the Apple story. So no one's selling Apple heading into that narrative. And in my opinion, this is the start of the renaissance of growth for Apple.
Conservative guidance, though? I mean, go back. Like what we hang on are the words of Luca Maestri, basically. He said that December quarter would be essentially flat. We ended up with slight growth overall and weakness in China. We're not talking about like a big rebound here, Dan. We're talking about them staying out of 5 consecutive quarters of growth declines. If there is growth, where does it come from?
Well, our view is you don't need to have hypergrowth in iPhones. Low to mid-single-digit iPhone growth is really what you need. Services is the key to valuation, 1.5 to 1.6 trillion. And then look at their active install base. I mean, they just gave the update, 2.2 billion. So you now have that golden install base, and now you're selling AI into that. That's a narrative that in my opinion, investors are just going to continue to sit here and buy up the dips.
When you're looking at the overall strength of new products, Dan. There has been so much hand-wringing about the iPhone 15. Then today, we're going to talk about it a lot in a moment, the Vision Pro goes on sale. How much is that in any way going to be a catalyst for liking Apple's tech? Because it was under pressure when we started to think about, well, the fact that the overall watch was pulled and we questioned, ultimately, the underlying technology of Apple.
Look, I think, but again, Apple continues to get counted out. I mean, Germer will talk more about in the Vision Pro, but originally we had 300,000 units for Vision Pro. Now we think for the year it's 600,000. And 2 years from now, I think this is a sub $1,500 device that's going to look like sunglasses. And it just goes back to the form factor and why you own Apple here. Some of the parts, I believe a year from now, it's a $4 trillion market cap.
Okay, so give us that catalyst. Give us is it a slow grind, a slow belief, a commitment of investors, or is there something that snaps down that makes us rebuy and decide to drive the stock back to a $4 trillion?
Well, I think it's the AI App Store we believe starts to get talked about at WWDC in June. And then iPhone 16, as well as iPhone 17, they're going to have more AI technology, generative AI driven into that. And then you look at that install base, 2.2 billion. That was 100 million more than we were expecting. This is the start of a renaissance of growth. It's my view of where Meta was 18 months ago. The street did not realize it at the time. I think 18 months from now, we look back at this as a seminal moment.
Dan, I want to go back to China. I want to understand what's happening. This is what Luca Maestri told us, that Apple's disappointed with the decline in China, but it's a very competitive market. Compare that with what he said in his opening remarks on the call. He cited that Kantar data that Apple occupies 4 of the top 6 handset slots in Greater China. In the prior quarter, they said this isn't an iPhone problem. This is Mac and iPad where we have not had a refresh cycle. Explain the contrast in those two statements.
Yeah, look, there's definitely not champagne and roses in Beijing for Apple right now. I mean, they're clearly going through headwinds from Huawei to geopolitical. But our view is you have 200 million iPhones in China, and they gained 300 bips of market share the last 18 months. But Apple has been here before. They've navigated challenges again and again. So I think when you look at what they've been able to do and the install base, they're basically being cautious. But I think we see growth second half of the year return, and we view this as more of them navigating headwinds rather than the start of some structural problem that the bears have been talking about for the last $2 trillion of market cap upcoming.
Dan Ives, always great to catch up with you. Where in the world are you? We don't know. Potentially, it looks like an airport at the moment. Analyst of equity research at Wedbush Securities. Stay well, friend. Have a great weekend. Meanwhile, coming up, we're going to be breaking down the latest numbers from the jobs report. Sylvia Martin-Chivik is going to be joining us, CEO of the workforce management platform Deputy. Let's go back to where these markets are trading at the moment. In amongst the earnings, there is a whole load of impact coming from the macro picture today. NASDAQ drives higher, 1.2%, led, of course, by some mega moves in Meta that we were just discussing. Amazon doing well. We'll dig into that in a moment. But the 10-year yield is phenomenal sell-off, 18 basis points higher on the 2-year. We're seeing significant moves on the 10-year as well, across the curve. Why? Absolute blowout report when it comes to the overall jobs surge, 353,000 in the last month. What then of all the tech layoffs that we've been seeing? It seems as though this economy is still going strong, and it means the Federal Reserve is unlikely to be cutting any time as soon as March, and certainly it's vindicated in holding rates steady. Bitcoin, as I show, actually up 0.6% despite the US dollar managing to rally on the back of those numbers that make macro data as well. But Ed, this picture is so surprising when you think of our area of technology and just the ongoing narrative of job losses.
I'm just going to read the numbers again because you're exactly right. And if you go on X, look at the number of what do we used to call it? Whatever. People that talk about finance on formerly known as Twitter platform. The number. Exactly. But it's a blowout, right? 353,000 jobs added in January, higher than all economists' estimates. The bulk of the data showing more employment, higher pay, and payroll increases across all industries. I guess the question, where do we sit with technology? So let's bring in Sylvia Martinshevic for her take on this. She's the CEO of global software platform Deputy, which recently put out a report on the changes expected in the workforce this year. We're trying to understand what's happening in the economy, and in the technology sector there is, forgive the pun, but an artificial thing happening with artificial intelligence that muddies the picture of hiring in particular. Your reaction to that number this morning?
Good morning, and thank you so much for having me. Yes, we are seeing that for the 24th consecutive month, the unemployment rate is sub 4%. And yet, we're hearing so much about AI taking jobs away. And what we at Deputy obsess about is how will AI impact hourly workers? These are the frontline workers, whether they're nurses or retail workers. And what we're hearing from hourly workers, they themselves are reading the same reports, and they believe that AI is going to impact and change their jobs and roles. But what we find is that in most scenarios, AI is more likely to complement specific work tasks rather than replace the workers. And really, when you think about the workers that we support at Deputy, whether that, again, are workers in elderly care or hospitality or services, we all prefer the human touch in those jobs. And those jobs are still, there's still a lot of lack of employees in those jobs.
And what's interesting about your report as well, humans are still cheaper than AI in many of these roles at the moment. And well, look, we're still all testing artificial intelligence, whether or not we really get the implication of being able to do more with less. But Sylvia, what's really interesting, this jobs report, was women. 198,000 increase in employment for women. So participation going up, making up for a pullback in men. And you had some interesting thoughts about how much AI is going to help or hinder females in the workforce.
Absolutely. We cannot talk about labor markets without talking about women. They constitute over 50% of hourly workforce, so this is an incredibly important topic. And when you think about historically, what were the barriers to women entering workforce? We know it's childcare accessibility and affordability, and it's also lack of predictability. But, at Deputy, we ask, what do women want from their work? And how can technology enable that? And what we found is that women want more predictability and they want more flexibility when it comes to their weekly work schedules. And, our mothers and grandmothers worked 9 to 5, but women of today, Gen Z and millennials, they don't want 9 to 5 shifts. And so how can technology help that is actually, we believe that it can be a great enabler. Micro shifts is one specific trend that we're seeing, where women work for a couple of hours in the morning, then they take, care of their kids or their aging parent, and then they go back to work and work a couple of hours at night. So that micro shift trend is something that we believe technology can help. So we really do believe that more tech in this space will provide more opportunities for women to continue to re-enter workforce after childbearing.
Love a bit of optimism around the AI story on what felt like a week where there wasn't much. Sylvia Martinshevic, we thank you so much, CEO of Deputy.
It's the official release day for Apple's big bet on virtual reality, the Vision Pro. Bloomberg's Dave Lee is live from Manhattan outside the flagship Apple store. The doors are open. It's on sale. What have you been up to?
Well, I've been here since about 7 o'clock when it was slightly warmer than it is now, I have to say. And at 7, there was a healthy line of people waiting to head straight in and be some of the first to buy this new Vision Pro, which of course went on sale today for $3,500. Tim Cook, the Apple CEO, as expected, he was here. He opened the store, came out, greeted everyone, said thanks very much, and all the usual things we've come to expect from these first sales days for Apple. And then downstairs, I have to say, there's a decent amount of excitement excitement. People, it takes about 20 minutes to get this thing fitted, so people were doing that and seeing what all the features were, and then emerging shortly after. So it's not quite an iPhone day, Ed. I mean, the line is definitely gone now. You can just head straight in if you'd like. But a significant amount of excitement, I think, for the Vision Pro on this first morning.
Dave, I was lucky enough to be flanking you at 7 a.m. and heading down there and having a chat with Tim Cook, and he seemed to be thinking that really it's the intuitive nature of this device that's got people really excited. The fact that you're just using your eyes, the fact that you're just using your own hands, you haven't got a controller. He himself also really liking the productivity use of it. But from your perspective, what do you like about it? You've tried, and I know you're a bit of an addict to the Quest, for example. What about this particular iteration?
Well, let's see. What I think is interesting here, Caroline, is what are we going to use these things for? And in Apple's case, they seem to, they're targeting this extremely premium, I guess, more immersive, higher quality experience where productivity and entertainment seem to be the focus. Meta's approach has been something a bit cheaper. It's only $500 compared to $3,500, and you can move around with it. You can do the exercises, something I think's really fun on that device. They're two sort of different philosophies, and Apple's philosophy comes with that bigger price point as well. Where I think Apple may, over time, get the upper hand is that, this is the V1 of this product, and Tim Cook has been kind of stressing that as well, that this is a new entry for them into a new computing format. The idea that this is going to get better and cheaper, that's clear in the same way the iPhone improved over time. So I think that's what's going to be interesting here. It's not V1 as we've seen today, but V2, V3. If it can come down in price, be a bit lighter maybe, less bulky, I think that would be when you can really tell whether this is genuinely a smash hit new Apple product or whether it's something a bit more niche.
Dave Lee, doing your duty down there in the rain. We really appreciate your opinion on this particular device. We thank you for it. Dave Lee on Fifth Avenue. Let's have a quick check on these markets, Ed, because look, the Nasdaq manages to outperform, even though we're worried about a strong macro picture that means perhaps the Federal Reserve ain't going to be cutting as soon as March. But dig into what's driving the Nasdaq 100. Just sea of green. Even Apple turns up to run, less than a point higher, but that's after their numbers showed, yes, a return to revenue growth, eking out that 2%. The market had anticipated a 1%. But remember, after 4 straight quarters of declines in revenue, that was a standout, despite that weakness in China where we saw revenue off by 13%. But Meta, absolutely extraordinary, up 20%, new record high. And we're still seeing, of course, them managing to be tripling profit. They're really driving up revenue growth. They're going back to the basics of what's good at advertising, as well as still investing in their AI. And then we leave you to Amazon, up more than 7%. Best online sales growth since early in the pandemic. This is about quicker shipping times. This is about job cuts. This is about discipline. And we can get to it with our next guest, Ed.
Yeah, I think that there's a really interesting difference with Amazon, and that is principally, hey, look at the profit we're going to hit in the current quarter. Let's stick with Amazon with Stefan Slowinski, Global Head of Software Research at BNP Paribas Exane. And it just goes down to fundamentals. We love exciting stories. Meta's about AI and competition in ads, and Apple's about China and Vision Pro. For me, Amazon's just about, we're going to make a lot of money in the current period, and it's a lot more than the street thought.
Yeah, hi, Ed. Thanks for having me on. So you're absolutely right. AWS, Amazon Web Services, squeaked by with 13% growth, but that was good enough. They are still losing share, we think, to Microsoft Azure. But we're seeing a recovery in cloud computing, large deals being signed, optimization ending. And that allowed for the market to focus on those North American margins, which they're able to lift and beat expectations. And I think what was important as well is with the Q1 guidance, they've actually left more room for upside. So if you look at the Q1 guide, 8 to 12 billion of EBIT, if you assume Amazon Web Services margins remain flattish at 29-30%, you assume international still loses some money, it actually implies the North American margins would go down from 6 to 4%. That's unlikely. The company gave us reasons why we should continue to see efficiencies there. So I think people see potential for beats coming ahead as well.
I've not ever heard of that, a company guiding conservatively and leaving room for for upside. I'm just kidding. The thing that I'm interested in is the advertising business, because AWS one-on-one with Azure, we know the competition there. But Microsoft doesn't have that right now, ad business. How much of a strength is that for Amazon?
I mean, certainly the ad business plays a good part of their online business, and that's been growing healthily in the mid-20s, and that's helping that margin as well. So as you pointed out earlier, Amazon was a company that in 2022 was doing sort of a 1% margin. The market thinks that can get up towards 10% here in 2025, and growing ads is a part of that. But I do think we need to keep an eye on what's happening with AWS versus Azure. Amazon Web Services is 50% of the cloud computing market if you look at just Microsoft, Amazon, and Google together. But in 2023, if you just look at the incremental revenue that those three generated in 2023, actually Amazon's share was down to 35%, with Microsoft Azure at 45%. And that's thanks to, obviously, the OpenAI relationship and what Microsoft and Google are doing on AI. I do think that gap may close again as AWS benefits maybe a bit more from the end of optimization. But that is something to watch as some of those share losses continuing on the cloud computing side.
I'm interested in your price target, an ultimate sort of neutral rating on this stock. When we're thinking of $1.7 trillion market capitalization, that's still enormous. You see, though, what I think a price target, correct me if I'm wrong, of 150, so below where we're currently trading. Why that conservative nature of coming from you, Stefan?
Yeah, we did raise that today to 160, but we are still neutral. But we do think that all three cloud computing companies benefit this year from Gen AI. So that's Microsoft Azure, that's Google Cloud, that's Amazon Web Services. And we actually think that that's a better way of playing Gen AI this year than the SaaS companies where we may see some disappointments. And that's Microsoft Copilot, it's maybe Adobe Firefly, or even ServiceNow with Pro Plus, where we may not see that revenue generation this year. When we look at Amazon versus Microsoft, we do prefer Microsoft. We are outperformed there. There is a valuation gap. It's shrunk, but you are on sort of 27 times earnings for Microsoft on 2025, about 30 times for Amazon. And you still do have much higher margins, of course, much better returns at Microsoft, and probably even higher revenue growth. So we think all three will benefit, but we have to have some preferences, and that's why we stick with Microsoft.
Stefan, great to put that context into play for us. We thank you so much. Stefan Slowinski, Global Head of Software Research over at BNP Paribas Exane. We thank him for it. Meanwhile, let's get back to the other big stock on deck, Apple's earnings. Bloomberg Intelligence Senior Analyst Anurag Rana joins us. And Anurag, well, the share's actually turning positive after a 4% slump. Are we managing to counteract it with the Vision Pro news, or is it more that we're getting okay with the fact that China will be short-term in nature?
Yeah, I have no idea. I'm a bit surprised at that, too. I mean, I think the print last night basically said there's going to be very little growth this year. So it is concerning. And I don't think Vision Pro can offset that. And listen, even if you sell 1 million units, which is way above anybody else in the world has modeled this out, that's $3.5 billion in revenue. Apple generates over, the consensus is roughly around $400 billion. So that would be, less than 1% of total, revenue addition to Apple. So this is not a needle mover when it comes to sales. I mean, China is the big factor, and we see nothing but disappointment there.
Kara, Anurag's keeping it real, which, if you read some of the notes out this morning, he's a bit of a standout in that respect, because a lot of people do see growth. I still don't understand this issue of China. We've done a lot of it on the show, but one thing that we haven't discussed is services revenue in Europe and the installed base. Yeah. The installed base continues to grow. So even if you look at one market geographically and say weakness in China, or one product category, weakness in whatever, overall, more people are buying Apple products and they have Apple products, and the services side's doing good.
Yeah, see, one of the things you have to talk about, we all know Apple's a phenomenal company. Amazing, installed base, services, all sorts of things that's going. But at the same time, you want to talk about the revenue model. How much can this grow this year, next year? This year, it's going to be less than 5%. Next year, maybe 5%. So the question is, how much do you pay for a stock where it's going to grow, 4 or 5%? And, I was listening to your colleague before. When you look at something like an AWS or a Microsoft, you're going to get double-digit growth for multiple years to come. So you take that into account, and then you match up. Apple has a lot to explain here, that how do they get to that 7-8% growth here? And I think it's going to be a challenging task, at least for this year and next year.
Because at the moment, the market braces for yet another revenue decline in their fiscal second quarter. So back to what we were seeing all of last year. I mean, any exuberance about this new VR, AR reality that we get on sale today, Anurag?
No, not on that, but he did utter the magic word Gen AI on the call, and you're gonna talk about launching some new tools and / products sometime in the second half of this year. I think that's a wild card that could basically prove me wrong, because if they're able to come up with certain things that are embedded in iOS 18 that will really make productivity higher, then you don't really need to download an app and do a lot of that stuff. And for that, maybe you need to go to iPhone 16 or the next version of the iPhone that may have some capabilities and then can drive the refresh cycle of iPhone that we've been all waiting for.
Bloomberg Intelligence Senior Analyst Anurag Rana, keeping it real. Thank you very much. Happy Friday. Coming up on the program, my exclusive conversation with Nvidia CEO, Jensen Huang. This was big picture and it was deep. Check it out next. This is Bloomberg Technology. Jensen Huang says that artificial intelligence will matter to every single country and industry on the planet. And crucially, that's going to drive up sovereign AI demand for his company's products. I spoke to Nvidia's CEO yesterday. Listen to this.
You have seen India, Japan, France, Canada now, Southeast Asia, Singapore, speak up about the importance of investing in sovereign AI capabilities. It is become abundantly clear to each one of the countries that their natural resource, which is the data of their country, should be refined and produce intelligence of their country for their country. And that capability of refining the data of their country and turn it into their artificial intelligence is now possible in a quite a democratized way. Almost every country should be able to do it for themselves. And what's needed, of course, is the technology and the know-how of standing up AI infrastructure, and that's where we could be quite helpful to various regions. And so I think that the recognition of the importance of sovereign AI capabilities is now quite global.
Jensen, does that recognition and your ability to help extend to China?
Well, we're an American company, and we have to comply with American policies. And whatever the rules and regulations are and the laws are, we'll, number one, comply with that. Work closely with the regulators and understand their intentions and their desires, work within those boundaries, and be able to create products for the various countries that are involved, fully in compliant with the regulations that are in front of us. And beyond that, once we comply, our goal and the United States would love to see us be a successful country. And one of the pillars of national security is successful industries, and it creates jobs and allows our country to stay ahead and technologically. And so it is of great interest of our nation that our American companies are successful around the world. And so once we comply with the regulations, we'll do our best to serve the local markets. And we have we have excellent communications with the administration.
How should we think about sovereign AI as a business line for you? Is there a way that we can understand how Nvidia's work, even if it's building supercomputers like in the UK, for example, what proportion of your overall business that will represent?
The vast majority of the computing market has been United States and to a much smaller degree, China. For the very first time, every industry would be every single country will become a computer industry, and every industry will become a technology industry. And so artificial intelligence, or the automation, the production at scale of intelligence, matters to every single country and matters to every single industry. And so for the very first time, there's a whole new computer market that is going to be in every single country and every single market. And it starts with, of course, the native computer industry itself. But you're seeing a great adoption in healthcare, great adoption in logistics, in transportation, of course, in manufacturing, in the large industries, the heavy industries. For the very first time, because of generative AI, computer technology is going to impact literally every single industry in every single country.
Nvidia CEO Jensen Huang is saying that data is a country's natural resource, but for them, let's be honest, it's a big growth market opportunity.
Absolutely phenomenal interview, just so wide-ranging, so global in its nature, kind of, well, exactly what you do so well, Ed. We thank you for it. Great deep dive. Meanwhile, look, we got some breaking news coming to us. In terms of the podcasting area, once again, we're starting to see that continue to mount. We have Joe Rogan set to renew his podcast deal with Spotify, we understand. So Joe Rogan, of course, one of the number one players in terms of the Spotify podcast offering, and indeed one of the most expensive for them. Joe Rogan is set to renew his podcast deal with Spotify, and we will bring you the deep dive as to how much that is all going to be costing Spotify. TikTok. Well, users will no longer hear the music of artists like Taylor Swift, like Drake, while using the app. Since talks between the social media platform and Universal Music Group, they failed. Here were the details. Bloomberg's Chris Palmieri. And Chris, the date was January the 31st. It wasn't able to be agreed upon. And the fight seems to be, what, from UMG's perspective over AI and money, and from TikTok's perspective, that we give you loads of free advertising, basically.
Yeah, I'm smiling because this is Grammy week in LA. Parties everywhere gearing up for Sunday's awards. It's may have been a total coincidence, but this was the perfect time for Universal to do this. Going to get a lot of sympathy from artists. It's going to be the number one topic of conversation everywhere, and very awkward for TikTok. They're a huge part of the marketing of music these days. Billion users, over 100 billion in revenue, and yet only 1% of Universal Music's revenue. And so this is going to have an impact on TikTok, lesser impact on Universal, but everyone is going to have something to say about this.
Chris, let's get some more on this breaking news. Sources are telling Bloomberg that Joe Rogan's close to renewing a deal with Spotify. What are the details?
Well, from what we hear, which could be announced in this morning, it's going to be another multi-year extension. It's probably going to be an eye-popping number. The last deal was for $200 million for 3 years, although we may not get the details immediately. Spotify's been taking a different tack with their podcasts recently. The last deal with Rogan was exclusive, although they put some highlights up online. This one may be available on other platforms, so that would be a departure.
All right, Bloomberg's Chris Palmieri with that breaking news and some more details. Spotify up 2%. Interesting. Sticking with the music space, what if you could invest in a hit song? Jukebox, which is currently seeking SEC approval, is a platform that aims to provide people with the opportunity to hold interests in music-related investments. Here to tell us more, ahead of the Grammys, is the company's CEO, Scott Cohen. So for clarity, this is not something you yet have approval for. That is pending. But I guess I start with the demand side. You must know that this is something that either the everyday retail investor or firms actually want to buy into.
Yeah, I mean, you're talking about maybe the first time they've actually truly understood an investment they made. When we're talking about the retail investor, they may invest in a tech stock, but do they really know what's driving that? But when you talk about music, there's something fundamental that people know about music, that this is a hit song, and I'm going to listen to it at my 10-year high school reunion and my 20-year reunion, and we'll play it at my wedding. You have a real feel for what songs are valuable and what are not.
You've got the music rights yourself exclusively secured. I think last time we wrote about it is at about $1.7 billion worth. Where are you sourcing that from? There's been so many interesting deals. Bieber selling his catalog to, of course, Hypnosis. We've seen Bob Dylan do the same, John Legend. But where do you access the assets from?
Well, exactly those types of players. As people are acquiring these catalogs, they're looking for new ways to exploit them. And when I say exploit them, it's bring it to the very people that made these artists big in the first place and allow the retail investor to get in on these deals. Because we've all read about it, Bruce and, as you said, Bob Dylan and Justin Bieber. Like, these are amazing deals, but nobody offered up any piece of it to the public. So for the first time, now the public can join in.
So there's a question on value and valuation and appreciation. Like, we've done this on this show about sneakers. There are platforms where you can trade sneakers, and part of the value relates to their scarcity or rarity. In the context of a song, isn't it just like whether everyone likes that song or not?
No, I would look at it a very different way. I mean, think about it. When music is played, somebody's getting paid. I mean, I don't care. You can go back however far you want,
So what if it doesn't get played?
Elvis.
What if it's a flop?
Well, what we're doing is listing songs that already will have an earnings history. It's not songs that have never made it. This isn't speculating on whether a song will be successful. This is looking at once a song is successful, it's always making money. I mean,
Is it making as much money, Scott, given, for example, at the moment UMG is at a loggerheads with TikTok because they're not paying enough?
If anything, that supports the thesis that music is really valuable, and that is why they're fighting for it. When we look at music, there's a very typical decay curve. Sure, a song makes a lot of money when it's first released and it becomes a hit, and then it drops off pretty steadily over the next few years. But then it hits its floor, which is non-zero, and then it earns money forever. And if you look at the Goldman Sachs report, I think they're pegging it somewhere between 6 and 8% annual growth for the music industry over the next decade.
Yeah.
I mean, once a song makes money, it makes a lot at the beginning, drops to a new level, and then slowly climbs. But then there's always this kind of wild card. Maybe it gets into a big film or, TV. Like, think about what happened on Stranger Things last season with Kate Bush.
Yeah.
Like, these things take off.
Jukebox CEO Scott Cohen. Diversification of investment there. We thank you. That does it for this edition of Bloomberg Technology.
Check out the pod. What a week. This is Bloomberg.